Hey guys, Tex here. Welcome back to the channel. In today's video, I want to walk you through how you can execute option trades using the TradeStation platform. So this is really going to be kind of focused on day trading options, and I'll walk you through how to execute just basic option trades as well as more advanced trades such as OCO orders and trigger rule activated orders. So hope you guys find this video helpful. As always, if you do, please leave me a like, show your support for the channel. I do appreciate that. So with that said, let's roll the intro and get started with the video. All right, guys, so welcome back. What I'm going to do first of all is let's just go to a blank workspace to make this easy. And the best way I find to execute option trades is to use a market depth window. So you can go to File, New Application, and go to Market Depth right here. Now my market depth window looks different. Yours is probably going to, it's going to have like all this other crap on here. It's going to look, I think, more like this, right? What you're going to want to do is just come in here and turn off the summary pane. So basically you just want to see the bid and the offer, and then you want your trade bar across the bottom. Then you can also come in here and open up the advanced trade bar, which is actually going to be really useful for setting up activation rules. And we'll go through that a little bit later in the video. I'm just going to close that and copy down my one of my order windows that I have on my main monitor over here because it's already kind of set up, ready to go. The only thing that I'm going to do is I'll just make this bigger here. And then I'm going to come in here and I'm going to turn on the advanced trade bar. There we go. And then we can grab this advanced trade bar and move it around anywhere we want. I like to put it underneath of the main trade bar, and we can expand that up so we can see everything there. Perfect. Okay, so when we're talking about trading options in the most basic sense, like just a very simple order, you know, for getting in and out of trades for, and I'm mostly talking about just buying calls and buying puts, right? I'm not talking about shorting option contracts. You're going to have I think level 5 options trading permissions in order to short option contracts. So you see these buttons right here. This is what this is going to be like the trigger that you're going to be pushing to actually send the order to the market. Now the two on the right over here, this is going to be for shorting, right? This is short to open and this is buy to close. So we're really going to be focusing on buying option contracts. So you're going to be focusing on these two buttons over here. Buy to open is going to basically send the order to buy option contracts, therefore opening your position, and sell to close is going to close that position. Now, of course, the first thing we can do is we can change our quantity and all that good jazz here. So, you know, whatever quantity of contracts you want to buy. And then over here on the limit price, I think by default it's on this auto limit price. So you can just come in here and like manually type in a price. The other thing you can do is just come in here and like click on a price that's in the market depth window, and you'll see that it automatically populates it. So all you're saying here is that you're just sending a standard limit order, right, to the market at whatever price you wanna get filled at. So I want to get filled at $70 or better, but not higher. So if I click on buy to open, it's going to submit a limit order for $70 to buy 5 contracts of these current. This is the Amazon contracts we're looking at right here, and there's absolutely nothing wrong with that, but it's obviously not very fast, right? So if you need a very quick way to get into trades, what you can do is click on this auto button and you go to hit take. All right, so when we do that, this is still going to use limit orders instead of using market orders. I try not to use market orders for getting into positions. I do like to use limit orders. But basically, if you choose that hit take feature and you have your contract quantity set here, when I click on this buy to open button, it is going to submit a limit order for whatever the top of the offer is at that time. So it's, you know, the market's closed right now, but the top of the offer is at $71.35 for these particular contracts that I just happen to have up over there. So if I were to do that, it would submit a limit order at $71.35, and it would probably get filled right away, as long as there was enough liquidity there to fill you for the amount of contracts that you're looking to buy. For stock like Amazon, it has wider spreads and everything like that. You may not get filled. I mean, you probably would unless you're taking really big size, but stocks like, you know, Apple and everything else, they're super, super liquid. So pretty much all the time when you choose the hit take feature and you choose buy to open off of that ask price, it's going to get filled straight away. Now, if the market's moving very quickly away from that price, you might not get filled because, again, you are using a limit order. You're saying that I don't want to get filled above $71.35. And if the market's already moved away from that price, unless it pulls back into it, you may not get filled, right? And in that case, you might have to actually come in here and change this to like a market order, and then just, you know, go ahead and click buy to open. And it's just going to submit, you're going to get in the trade at whatever price, right? You're just saying, I want in this trade right now. So that's really the best ways, just to use limit orders to get in very quickly, is to choose that hit take feature. And then likewise, if you're already in a position and you want to take profits and you want to get out like right away, you leave it on the hit take feature. You know, maybe you want to sell 3 out of your 5 contracts, and you click sell to close, and it's going to sell on the bid this time, right? Because it's just going to take whatever the buyers are at the top of the bid to just go ahead and sell your contracts. Now, when you're trading option contracts that are like Amazon that have wide spreads, I mean, the market is closed right now, but you can see the spreads right here. They're very, very wide. Sometimes, you know, even at the money strikes right off of the open, when the stock market opens, they can be $7 or $8 between the bid and the ask on Amazon contracts. That's really wide spreads. So what you might actually have good luck doing is choosing this join feature. So what that's going to do is, if, like, for example, if I have this on 3 contracts and I have no position, and I click buy to open, it's going to submit a limit order to buy 3 contracts at that bid price. Now, you may not get filled, right? Because you're going to be sitting on the bid along with all these other buyers looking to get filled. And so you're probably going to need the stock to pull back a little bit in order to get filled. So I kind of find that this works really well when you're trying to buy that weakness. For example, when something is selling off into a support level and you're trying to buy that weakness, buying off the bid, you usually do get really good fills, instead of actually just swiping the offer. So that's something you can do, especially on these more expensive stocks, to try to mitigate some of that risk whenever there is a rather wide spread between the bid and the offer, especially off of the open. The other thing, and it works the same way. Obviously, if I was in a position and I click sell to close, it's just gonna sell on the ask, right? So I'd have to wait for a buyer to come up and sell, buy my contracts. Essentially, I'm looking to sell for the best price I can. But the other thing you can do is choose the split feature. And this is just going to place an order in between the bid and the ask, right? So the bid is at 65, the ask is at 71.35. So it's going to place an order in between those, and those will generally get filled pretty quickly too. And you'll usually get a pretty good fill because you're not giving up as much as you would be selling at the bid, but you're also not sitting on the ask hoping to get filled, and you might not get filled. So that can work really well, especially on these more expensive contracts. But that's just a really quick and easy way to get in and out of trades. And by the way, you would not want this checked. We'll talk about that in just a minute, but this is what you would want. You would want your quantity set here, and then you would choose whether you want to sit on the ask to close your position, sit on the bid to open a position, or if you'll take in between the bid and the ask. Or, hey, I want in this trade immediately, I'm going to choose the hit take feature. Obviously, this is on limit. You can choose intelligent route. It works fine. For the duration, it doesn't matter. Like, the market's closed right now, so this has to be on good till canceled. But during the normal trading day, you can just have this on day. It really doesn't matter. Good till canceled works. Obviously, you can choose your account here. I'm in the SIM account because it shows your account numbers all over these things. So if you had multiple accounts, you could choose your account there. And that's it, right? But let's talk about like how you can do more advanced trades. So for this, let's go back over here and let's look at this chart here on Apple. You can see that Apple had this sell off right into this 146.46 level. This is a mathematically calculated level. I've talked about this before, but this is part of Smash the Bids service. I'll put a link in the description below if you want to check that out. But let's say that you take a long off of this level here at 146.46, and you're looking for a retracement back up into the upper calc up here into 148.63. All right, so let's go back over here. Let's go ahead and pull up the Apple 146 calls. So we're going to do the ticker symbol space, the expiration year, month, day, call 146. All right, there we go. So we have the Apple 146 calls up. And let's say that you want to put this trade on, but you want to attach a stop loss order to your position before it's actually opened, right? So what you can do is effectively what you're using is like an OCO order. So you're going to actually choose attach OSO. So you click on attach OSO, and you'll have this drop down menu right here. And you want to choose to just simply attach a stop loss order. You're going to choose exit stop only. And you're going to come in here and click on these 3 little dots. And then this is where you can set how much you want your stop loss to be, right? So, I mean, every stock's different. Like a stock like Amazon, your stop loss on the option contract is going to be probably several points. But a stock like Apple, your stop's probably going to be maybe 15 cents or something, right? So let's say that you want to give these option contracts 15 cents of room before it triggers a stop loss order for you to just take the stop on the trade. So you'll see it's using a stop market order. So essentially it's going to use a market order. And what we're telling it is whatever price we get filled at when we open the position, we want that stop order to trigger if the premiums fall to 15 cents or lower, or if they fall to 15 cents, it'll trigger the order. The stop loss order. So you set that price offset there. So we're going to do a 15 cents. We click OK. And then what we're going to do here is, we go ahead and select our normal contract size as we normally would. And if I have this set on hit take and I click on buy to open, it's going to send a limit order at $3.35 because that's the top of the offer right now, to buy 5 contracts. And then it's going to, at the same time that order gets filled, whatever that cost average is, assuming I get filled at $3.35 cost average, it's going to immediately submit a hard stop, a stop market order that is going to be 15 cents below my cost average, right? So if I get filled at $3.35, it's going to send a stop market order at $3.20. Okay, so right away, as soon as I open my position, I already have a hard stop in place without even having to think about it. It's already in place. And if the premiums drop to $3.20, it'll activate my order and I get stopped out, right? So that's a great way to attach a stop loss order to your opening position order without having to do it after the fact. Of course, you can come in here and change, this to stop market and manually place a stop order. You would set your stop price here. You could do all of that. But I just think that it's really great that you can go ahead and attach this OSO order and have your stop attached right from the get-go. Now, one word of advice, once the position is opened and you have your stop market order already attached and it's already set into the system, if the trade starts to work and you're getting ready to start taking profits, you need to come in here and make sure that you uncheck this attach OSO order, because what you're going to have to do is once you get to your profit target and you're ready to start taking profits on your trade, you're of course going to have to cancel your stop market order. You can just choose cancel all here. And it'll go in and it'll cancel that stop market order that you had in from the get-go. And then you can go in and you can go ahead and sell your, you can go ahead and take profits, however you want to do that. You can manually put in the price, or you can, like I said, however you want to take profits. But you just want to make sure that before you submit your order to take profits, that you do uncheck this OSO order, because it is going to attach a stop market order to your take profit order, and you can get yourself in trouble that way if you don't realize that you did that. So really important to remember that. Now, the other thing that you can do is you can also attach a stop market order as well as a take profit order if you want, so that effectively the trade is on autopilot from the very first minute that you hit the button to open the trade. So a similar, you check attach OSO, and then you would come in here and just to do a simple one, we're going to have one take profit order and one stop loss order. So we choose the one limit and one stop. Okay. Then we click on the 3 little dots here. So you'll see that we have 2 orders here, right? So this first one, the limit order, this is going to be for our take profit order. And then the stop market, this of course is for our stop loss. So we're going to keep the 15-cent stop. Okay, but let's say that we want to take profit at maybe, 50 cents. Okay, so that's obviously better than 2 to 1. It doesn't matter, whatever the case may be. And then this is the price offset from your cost average. So whatever you get filled at, again, assuming I get filled at $3.35, maybe I want to do $1, whatever the case may be. And you can do that math. You can look at the delta of the contracts, and then you can go to the chart and figure out, what are you targeting on Apple's chart, and how much those contracts should be worth if that target gets hit. You can actually do that math to kind of figure out about what the premiums would be worth. And then you could come in here and use that to actually input for your take profit order. So just to keep things simple, let's say that my take profit order is $1 above whatever my cost average is. It's going to sell my entire position. So if I get filled at $3.35, it's going to have a take profit order at $4.35. And then it's also going to have that stop market order 15 cents below, so down at $3.20. So, and it's an OCO order. One will cancel the other, right? So if the trade works and it comes up and it hits my take profit order, the take profit order will execute, and then the stop market order here will be canceled. Likewise, if it comes down and stops me out, the stop market order will execute and that take profit order will cancel. So right from the get-go, we can be set up on autopilot. We just click on OK. And then for this one, I think if I remember correctly, because I'm still kind of new to this platform, but if I remember correctly, it is kind of finicky. Like if you do the hit take feature and you have this attach OSO with a take profit and a stop market order attached, it's going to execute it right away, right? It's going to open your position and then close it right away, back to back. So I don't believe that you can use this hit take feature if you're going to be attaching an OSO order that involves a take profit order and a stop market order. It does work fine with just the stop market order alone, but I don't think it works doing it this way. So basically what you're going to have to do is just do the manual, right? So you could come in here and just manually set it on the ask price, and then if I click buy to open, it will go ahead and submit that limit order to buy 5 contracts at $3.35, and then it will automatically have that stop market and that take profit order attached, ready to go. And this is obviously really great if you want to put a trade on, but you're not sure you're going to be able to stick around for the duration of the trade. This way, everything's on autopilot. You can walk away from the screen and you don't have to worry about a thing. So that's really awesome. Now, if you're already in a position, what you'd have to do is come over here and do the same thing, but you're going to place an OCO order, right? So you just click on this, and this is where you can come in and, you know, our take profit was $1, our stop was 15 cents, right? And then you click OK. And then when you click on place OCO order, what it's going to do is it's going to place your take profit and your stop loss order based on whatever the current price of the option contract is. So you kind of have to, if you're doing this after the fact, it won't be based off of your cost average. So that's really important to remember. It'll be based off of the current market price of those option contracts. So you'd have to do the math to kind of figure out, you know, how where your take profit and your stop loss should be based on that. So it is kind of easier to just do it from the get-go using the attach OSO, because it's going to be based off of your cost average. So that's a great way to automate your trades. But let's get into a little bit more advanced features that you can do. So again, kind of going back and looking at this chart of Apple, one thing that you can do for, we'll talk about getting into trades and then getting out of trades, but one thing you can do to automate your entry into a trade is, let's say that, you know, Apple opened here and it sold off right into this calc down here at 146.46. So let's say that, you know, you see Apple selling off and you really love the idea of getting long into 146.46 if it touches that level. You can actually automate that, and you can tell TradeStation that, hey, I want to buy some 146 calls if Apple stock touches this price here. So what we can do is come over here, and we're gonna come down here and choose this activation rule. Check that. Click on these 3 little dots. Then you're gonna check the price here. You're gonna type in the ticker symbol, right? So we're talking about Apple. So you're gonna type in Apple. Click on Add. And then right here, you can choose what you want it to do, right? So we want to buy these calls if Apple is at or below that price, which is 146.46, right? So we're going to choose less than or equal to, and then we'll type in that price, 146.46. And then you want to come over here for the trigger type. You want to choose the single trade tick with NBBO. So in other words, what this is going to do is, if there's a single trade tick that hits on Apple stock at 146.46 or below, it will activate this order only if the national best bid and offer is also down there, right? So if you get some erroneous tick down at 146.46, but the bid and offer never were down there, it won't trigger this order. So that's actually kind of important. You want to make sure that you do choose this one here. Okay, so basically what we have here is that if Apple if Apple's stock, the stock itself, the underlying stock, if it trades down to at least 146.46 or lower, as soon as it touches that, this order will be triggered and activated. But you could also take it a step further, and let's say that, hey, I don't want this to be activated until a particular time, right? Maybe I don't want this order to be activated until 10 a.m. or something, right? So you could come in here and set a time element to that too. So maybe, you're thinking that I don't want it if it doesn't get there, or I don't want it if it gets there before 10 a.m., right? So you can set that up here. We're just going to stick to the price feature. You click OK. And basically, that's all you have to do. And we want to select market right here. So it's going to use a market order to submit this order. So basically, you would click buy to open, and it's after market hours, so it's obviously not going to work. But go back and look at the chart here, right? So I mean, obviously, after the fact, Apple's way up here. But if I were to submit this order during regular market hours, and Apple sold off into 146.46, this order would be triggered, and it would execute a market order to buy 5 of these call contracts at that point, okay? So this can be useful for automating entries into trades. Obviously, it's not something that I would probably use very often, because when it comes to entering a trade, I do want to be very aware of what's going on and the price action and everything else. I want to have full control over that entry process. But where this can be especially useful is if you're already in a position and you, for example, you want to, because we are trading these option contracts off of the underlying chart, right? So we're basing the trade idea to buy these calls based on Apple's underlying chart, right? So we like these calls if Apple comes into 146.46. So we get in the trade and we're like, okay, we want to sell at this next calc level up here at 148.63. So what we can do is, once we're in the position, we can use that same trigger rule activation to say, hey, I want to sell these contracts if Apple, say, maybe gets to 148.50, which is just underneath of that calc level, right? So we go back over here, and let's assume that we already have 5 contracts on these calls. We can go back to our activation rule here, and this time we would obviously choose greater than or equal to 148.50. Same thing, single trade tick with NBBO, click OK. And then we would click sell to close, again with it on market order. And once Apple, if we were in this trade, we would have, this order would have been triggered. Looks like the high of this candle was 148.56. So right here on this candle, when this pushed up into 148.50, that trigger rule would have activated that order, and we would have sold our 5 contracts using a market order at just the perfect time, right? I mean, just absolutely perfect time. So that's a great way to kind of set a profit stop as well. If you have to walk away from the screen, for example, I used that today when I was trading SPX. I wasn't able to stick around, so I used that activation rule. Whenever SPX got to the level that I was looking to sell my contracts, it would just go ahead and submit that market order and close the position out for me. So this is just a really kind of a quick rundown on how you can execute trades, specifically option trades, using the TradeStation platform. Everything from just basic entries and exits to a little bit more complex orders. There's a lot more that you can actually do with this. I mean, you can do trailing stops and all kinds of stuff that I haven't even really completely dived into myself. And all of this can really be programmed as well. If you wanted to get into automated trading and have a bot do this trading for you, obviously you can see with all of these advanced order capabilities here with this platform, you just have a lot more tools at your disposal than a platform, for example, like Lightspeed that I've traditionally been using. All right, guys, so I hope that video was helpful. Like I said, if you did enjoy the content, make sure you leave me a like below. Leave me a comment as well. Hope you guys are doing great. Have a great and green week of trading. Thanks as always for watching. Take care, and we'll see you in the next video.